One thing that's not going to change is mergers and acquisitions. We got the latest news from Chevron. It is going to acquire Noble Energy. This is an all-stock deal worth $5 billion. And it's putting a focus on what's happening in the oil markets as well as the natural gas markets. To help us understand that and much more, we invite into the program Phil Streible. He is Blue Line Futures Chief Market Strategist. Good to have you here, Phil.
Yeah, thanks for having me on.
Before I get into this issue with Chevron and buying Noble Energy, there was a story I saw about China potentially done buying oil and maybe even selling some of its reserves. Is there any validity to that? Are you seeing that? Are we seeing that in the price of oil worldwide?
Yeah, if you look at the crude oil that China has in demand, their storage capacities are pretty much at that upper echelon. So they're pretty much at capacity right now. And I mean, you look at oil, you put things into perspective. I mean, year to date, we're down 34%. But if you look at the last 3 months, we bounced from zero to where we're at right now, up 96%. You look at technically, we're holding $40 over the past month. OPEC's done a great job. They've tapered off to try and rebalance the market. Obviously, if you look at the chart over the last month, the implied volatility has come out quite a bit, and the market's stuck in this $1 to $2 price band. So I think we've hit an equilibrium point. We're kind of waiting for that next catalyst.
Phil, I do want to ask you about the deal as well, because it's interesting here that we're seeing this after there was a big deal that they missed out on last year, right? Chevron did. Noble's a much smaller company. And so I'm wondering, especially given that so many dynamics in the market have changed, that perhaps Chevron is glad that it waited or lost out and now is buying Noble instead. How is it being viewed, do you think?
You're going to see these companies that were better positioned coming into this pandemic, that had proper hedges on, were properly capitalized to take advantage of some of these heavily debt burden, but with great business structures. You're going to see these types of acquisitions. They're definitely going to continue to come through. The market, if you look the way we bounced, we're kind of going from this accelerated growth off of the lows. We're starting to see a bounce in inflation here. And then what's going to happen is we're going to shift over to a stagflation period. So inflation's going to kick in. There's going to be very little growth. We don't expect like gasoline demand, oil demand to pick up any more than what it has. That's why we think China is kind of tapped out on what they're buying. So you will see oil, though, will continue to creep higher. It's going to start tracking like things like gold, silver, and some of the grains.
Hey, Phil, it's Brian Chung here. You were mentioning a lot of these debt burden, energy-related companies. What are you seeing on that front? We have seen a number of large oil industry-involved companies seeing downgrades when it comes to their corporate debt. What are you seeing in that space? Do you worry that there could be a further wave of defaults? We've already seen some companies go belly up. And how do you think that what might fuel a possible M&A, as maybe the healthier companies that can take on that balance sheet risk maybe might try to seek out those acquisitions?
It's definitely going to continue. I mean, it's not only in the energy space, it's almost in all sectors, everything from retail to, restaurants, leisure, I mean, everywhere. So like when we analyze things, we'll look at all these guys on who's got the highest debt burden, who is got one of the worst credit ratings. And then we look at some of those star performers out there and look for strategic allocations between the two. So we definitely think M&A activity is going to continue.
Phil, which is the more valuable asset for Chevron as it acquires Noble? Is it the natural gas resources off the Israeli coast, or is it the 92,000 acres, in Western Texas from the Permian Basin?
Man, that's really a tough one. I mean, we really do believe that the area in Texas is much more valuable. Natural gas prices just continued to decline. They haven't had much of a rally whatsoever. We think that having the opportunity to continue to bring supply to the table and distribute that supply, especially in an environment where we think inflation is going to pick up. We do believe that oil prices are going to get back over, in the 40s and the 50s. It's going to take some time. We just got to monitor the current situation and see if, some of these lockdowns begin to be lifted even more.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.